All right, good evening, guys. Kata Tortoise Capital Nightly Strategy Podcast for Wednesday night, November 16th, 2022. So, I had our strategy meeting with the Tharp Institute today and was just reviewing with them, the current course offerings. So, I thought I'd just go ahead and cover that now and to help them understand what we're doing. So, to me, the foundations course is the necessary element that supports the core, swing, and day trading. Hybrid trading, on the other hand, that course pulls together each of those individual components into a comprehensive package. The creativity course I see as a wrapper around that supports improvements in all of those areas because it gives you skills that you didn't have before. And then outside of this educational area is all any coaching or operational trading like we're doing in here, where we're reviewing the current events of the day and the trading plans and looking at results. In addition, if you look on tortoisecapital.net, I've just put together a bunch of very low cost trader's mind courses that are like, I think, just generally purpose good things to have and to make you skilled adults. They're really geared towards new college students. And I run my high school and college players through that to prepare them for life. That's like goal setting, mindfulness, listening, relaxation, meditation, stress management, values clarification, team building, that kind of stuff. So, just as a quick refresher. Now, what I'm going to do, I think, to make that a little more accessible to people, is to break out the foundations course into it. It's really 4 courses. And course 1 in the foundations is really the boot camp, which is the technical trading component that teaches the 3 fundamental patterns of the supported spring crossing, collapsing dragon, and Kata 2. The second course is the 37 strategies, which goes to the other end of the spectrum and lays out what's essentially over 40 different edges that we have based on our unique way of looking at the markets, how to think about fractals and trade framing and risk management and mindfulness and identity and all that stuff. Courses 3 and 4 have to do with psychology. Course 3 is about self-awareness and connecting at a deep level to who you are, what pushes your buttons, what is your identity and purpose as a trader to help you focus on objectives. And then 4 is applied psychology, in which we take 10 different typical episodes of psychological challenge in the market and practice experiencing it and developing a strategy to deal with it and learning how to recognize those psychological traps when they occur as a way to build resilience and mental toughness. So all 4 of those taken together are the foundations course, and they give you, when you come out of that, you have 3 patterns that are tradable on any time frame. But it also sets the conditions for understanding what we mean by core trading, swing trading, and day trading. And then the hybrid allows you to blend the information that comes out of each of those domains into an effective plan. So I think what VTI is going to do is, and I recommend it to them, is that we break out the boot camp into its own separate course for people that either think they don't need psychology and strategy and want to just focus on elements of trading right away. Invariably, you'll end up coming back to these courses later at some point to learn those lessons, history has shown. But in order to make that more accessible, I think that's what we're going to do, is just offer people the opportunity to have what they want, which is the boot camp. Sniper trade of the day. So I want to be clear on what we mean by the OR3. I think no one needs to listen up on this one. So this blue line is how we mark yesterday's close and then today's open, which was down here. So there was actually a gap to there. The OR3 is the opening range of the 3-minute bar. So this is a 3-minute bar. So the high and low of that bar constitute the OR3, and I have that shaded in blue. And what we do is we wait to see it break out. If it were to break out north of that, that would be an OR3 long. Or in this case, we're going to see an OR3 to the short side. So we're treating that kind of as the yellow zone. I probably could have made that yellow. And we're just waiting for directionality. And it would be nice if that OR3 was also an MMRB. Sometimes it is. Sometimes the MMRB is smaller than that. But that's what we mean by an OR3. We just wait for the first 3 minutes to go by and then wait for the breakout. So this one, you can see what we have is it opened here, it ran all the way up to the top, and then the next 2 bars kind of monkeyed around, came down to here, and then on this bar, it broke down below the low of the opening 3, so therefore we take the short position here, and it turns out that the MMRB on this symbol is here. What's interesting is it coincided with the top of that bar that we entered on, but that's just a coincidence. So that's what we're doing. That's the OR3 and the initial entry to the short side. Okay. So now we're about 5 or 6 bars into that. It has left. It's left the risk box, so that was our entry short. Approximately, no, actually, yeah, right about here was where we got filled. And there's the risk box. And so it stayed south of that for that whole period. And now so now at this point in the trade, where it starts to break down below that little congestion zone, that's like one risk box level lower, so it's between like about 0 and +1, and it kind of monkeys around in here. And then when it breaks down out of that, by that time, by right about here, you should have your stop to no lose plus dinner for 2. You could take the 2-bar low, or the 2-bar high, I should say. You might be just using the, see, if you're using the PSAR, your stop is here, and you could still technically lose money on that one. But I don't like to do that. I like to get my stop to like that 2-bar high and lock in that little wedge, the no lose plus dinner for 2. So while this price is dropping, my stop is here, and I'm not offended if you want to march that stop lower. Whatever your exit strategy is, the key is getting to no lose plus dinner for 2. Check or hold. So in my view, your stop should either be here or at the edge of the dragon, or you might pick half. You might pick half of that bar that just closed, and you decide how much you want to keep. You know, at a minimum, you should be keeping this much. You might want to keep that extra piece. You might want to keep that piece and keep that whole pile, because that's about the size of your risk box. That's about 1R. So you decide. And uh, take any of those exit you want. You might have had a more relaxed exit and say, hey, let me see a reversal in the R10. Let me see it cross the baby dragon and then take somewhere here around the edge of the dragon for that's about 1R. Now it rolls over right away. It momentarily, price exceeds the PSAR. What matters is the R10 comes up, touches the PSAR, doesn't violate it, and then starts to fail again. As soon as that comes through the edge of the dragon, I'm short again, re-entry, and there's my risk box. Standard re-entry on a Kata 2. Standard way of managing that exit, waiting for the R10 to break through. And when it doesn't, you can immediately re-enter. After 1R in hand and I get that reversal of the R10 and it crosses the baby dragon and it didn't fail right away, I don't mind taking 1R. And then I don't mind 3 bars later getting right back in. Nothing wrong with that. Now, by this time, in that trade, if you're using the PSAR, your stop would be here. If you saw that and you were at the 2-bar low, you might have gotten out right here. And if you had done that, you would have captured another 0.5. Is there anything wrong with that? No, there is not. Nothing wrong with that. A real choice. Now, notice again, in this case, the price didn't even get through the PSAR. Up here, it got through the PSAR. Here, this little test failed inside the dragon and reserve. So this is actually weaker, in other words, a stronger signal to the downside than this one was. Why? Because it couldn't even get to the PSAR, couldn't even get through the dragon. So now if you look at this and say, there's the bottom of the R10, that makes this what kind of pattern? Check on learning. Collapsing dragon. Yes. And you might also call that a Kata 2 because you have a high, a lower high, and a Kata 2 would be in here. A collapsing dragon would be just below that. Technically, I suppose you could get short right in here when the price comes out of the dragon. You might have waited for this to break, and then your collapsing dragon would be there, and Kata 2 would be there. But that's a legitimate place. Now, you're also holding about 1R in hand, so you might not want to put a second position on, but you could. That at least gives you confirmation that this thing is now making new lows. And now you might decide from here, oops, that should be red. You might decide from entry here to move that stop down even further and lock in that whole piece right there. PSAR exit for about maybe 3/4 of an R. So that's a unit of reward. That's about, call it 3/4, 0.7. A grind. Now, for the first time, you actually have the PSAR flip. Could you take this as a long? Yeah. You could. You would call that a SSC because you have a large sell-off, fails to fail further, PSAR flip, RLXD. You could take that long. By this time, if you take that long, if you take this one long right here, you should be getting out right about here. In other words, the same signal that's going to give me a favorable downside move, which is a Kata 2, because again, we have the lower highs, and the RL10 crosses the dragon, breaks the PSAR. Because that K2 is a strong signal to the downside, you don't have any reason to stay in this long side trade because you got a strong signal for a better pattern to the downside. So if you get long here, then this should be a stop and reverse. Scratch. Now we've got a shift in orientation. We got 1R on this one. We got about 0.7 on that one. This one was kind of a scratch to the long side, and this one was a scratch to the short side. Now what I want you to feel is that this is really just one giant sideways pattern now. I might do something like this, where treat that as the yellow zone and maybe take that long or that one short. Because why not? If you had taken this one long and it comes back to here, you should not lose any money on that trade. The violation of that PSAR is plenty of evidence that the upside did not work. There was only this much power to the upside, not even a full MMRB before it failed. So you would just get out with a scratch. Now on this one, the short side signal for me is indicated because here's the support levels. And what would you call a violation below that red line? Collapsing dragon. What's our number one favorite pattern? Collapsing dragon. Now, by this point in the trade, this is what happens on a collapsing dragon. When that statistical support level breaks, it's not unusual to see that new selling pressure instantly take it this low. As soon as that happens, why not just go here and lock in a piece? Why not just do that? Why not just lock in a piece? And now you can suffer. Do I want to be here? Do I want to be there? Do I want to add another position if this little cluster breaks? Maybe I want to add a position there. But I could be here or here with no qualms. So if on your little score sheet at home you had elected to add a position here, or when this breaks, add a position here, why would you add a position here? because this shelf broke and you had the R10 wiggle. Instead of rolling back up, it broke down to a new low, so that tells you you could do that. Plus, by that time, you probably got close to 1, 2R. My brother would just say the 2R battle drill tells you you could be adding a position somewhere in this region. Let your conscience be your guide. Can you feel this thing running out of energy, though? You know, it's had about 1, 2, 3, 4, 5, 6, 7. It's had 21 minutes to fail further after this first burst down, and it hasn't. And you can see the relentless marching of the PSAR is going to be like this. So it has about this much room. It has about that much time to break down, or the PSAR is going to time it out. The PSAR is relentless. It says Fisher cut bait. It tried once, it couldn't, so just take the PSAR. One unit of reward, one and a half of gain. Could you take this as an SSC? You could, but to me, we've had 3 winning trades to the downside. The market was weakening all the way across the board. What's the hurry? Maybe I want to see this find support and go again and then enter somewhere over in here if that really holds. I'd like to see the R10 test and then hold. I'd like to see it hold above the PSAR, because then that would be a Kata 2. Haven't really seen any powerful buying pressure in this thing all day, so I don't know. And then naturally said, oh, darn. Obviously, the SSC would have been perfect. But here's the Kata 2 entry, because you had the R10 wiggle. This is where it was supposed to fail, but it didn't. The R10 pulled back, caught the edge of the dragon, and then resumed. So somewhere in here, or here, somewhere in that bar, there's a legitimate entry. And then you would take this size MMRB, bring it down. So if you got long here, your MMRB would be like there, which feels correct, because then as soon as this breaks, if you go long here, and then this thing breaks, what would you call that pattern? Correct, collapsing dragon. And I think that was the end of the day. So this is just EWZ, a frog champion, one of the usual suspects. Why is it a frog champion, Ken? Because it trades with a high signal-to-noise ratio intraday, is more volatile than the S&P, often moves uncorrelated to the S&P, so it can have a large directional move when the market is going sideways. Sometimes it moves in the direction of the S&P, sometimes it moves opposite to the S&P, sometimes it moves like it did today when the S&P doesn't move at all. So EWZ has all of the qualities of a frog champion reliably year after year. That's why EWZ is part of the Kata 2 challenge, where we take one symbol, either EWZ or DIA, and trade only the 3 patterns of the Foundations course, which is supported spring crossing, collapsing dragon when that fails, or Kata 2 when it works. And we just trade one symbol all day until you master those three patterns. That's what we teach you in the foundations course. Oh, and that's what we teach you in the boot camp course, which is course number 1 in the 4 courses of the foundations. So the foundations is all 4 courses. You have boot camp, 37 strategies for strategic view. Boot camp gives you a tactical view. And then psychology 1 and psychology 2. Psychology 1 gives you self-awareness and self-discovery and goal setting. And psychology 2 prepares you for 10 typical challenges in the market that we face all the time in order to build resilience and a bulletproof mind. So that was the sniper trade of the day. This is the 30-minute S&P. So this is our 5-day look back. There's the 5-day high and the 5-day low. That's why this thing is shaded blue. That's the trading range for the 5 days. And then today was just this little box. That was today's range after the previous 4 days were kind of good and then has rolled over. This was a nothing sideways day, and it's poised right at a level that if tomorrow that breaks, you would look for targets 1, 2, and 3. But if it breaks above the PSAR, you'd be looking for upside, and then there's our first target, and then above this around 412, just off the chart, is another good target. So this is a compound critical state. Yesterday the market was moved into sideways. Today that little failure brought it just barely back into the bear normal, which we'll see in a minute. If I look at the 30-day look back, so these are daily bars. Here's my 5-day, 10-day, 20-day, 30-day look back. There's my 5-day range. There's my 10-day range. Here's my 30-day range. These purple lines are all the support levels that have held, or the resistance levels that held in previous that become targets. Like this one's important because that's where the PSAR flip is going to occur if that support level fails. This purple line was the breakout to the upside of that resistance level at the peak of the RL10. So when that broke here, that told us there was a chance for a move, which there was. But today was an inside day, couldn't go further, has not yet broken down. That makes this a perfect compound critical state, ready for a large move in either direction, and you have very clear targets in both directions. Both of those sets of targets are in range tomorrow. And then if the 5-day low breaks, next target 10-day low. That's how you start building the price ladder of reasonable targets. The 150-day look back, this is where you see the reasons for those other purple lines. This one comes over to the peak of the dragon, and when this broke to the upside, you got a nice move. When this broke to the downside, you get that double leg down. So that's why this one at 412 is absolutely crucial. It could get to 412 and then fail just like it did over here and here. It could also get to 412 and go to here, or the peak of the dragon, like it did in this region. So 412 is really important. But it's got to get out of the 30-day high. Like if it can't get through here, which was the previous peak, when this couldn't sustain further than that, the PSAR never flipped and it gave you this. So if this fails right here, you are not allowed to be surprised if it comes all the way back to 358. Because that's what it did here. And that's what it did here. So if it does that here, how could you justify being surprised. You cannot. Now, there's a price ladder, like it has to violate through this support level to get there. So you could even think of that as leg one and leg two. And if it breaks here, you want to be short that thing in a big way. By the same token, we're not even free and clear leg one until it breaks north of here. But really, here, it's not till it gets above about 430, 434, that we really can breathe a sigh of relief. So this is all tactical trading inside here. Not believing in the direction, just recognizing price action for what it is. Let's take a look at the sectors today. S&P was down 0.76. Diamonds were stronger, only at 0.04 was off. Here's the cut line between winners and losers on an absolute level. Treasuries were the only big index we follow that was up. It was up 2.1%. The losing indexes, tech, yesterday's leader is today's loser at 1.36. Emerging markets, which were so strong yesterday, fail on why? Missiles falling into Poland. Oh, shot by Ukraine. But we can blame Russia. If you're going to blame Russia for that, then you should blame the people that pushed Russia into the war. If we want to start assigning moral hazards. So, tech, emerging markets, and the Russell was the big loser at 1.76. To the upside, what worked? Lumber, wheat and precious metals, finance, and agriculture were only down 0.3, 0.5, 0.5. The other lumber was flat. Aussie dollar was flat. Mexico and staples up 0.1 and 0.5. Marijuana up 1.8. So there was pretty slim pickings on the actual winners for today. Where were the losing positions? A lot of things worse than the S&P today. So let's just itemize them. There's the S&P minus 0.8. So you've got real estate, materials, blended commodities down to 1.1. Tech and discretionary 1.5. Oil 1.6. The FANGs 2%. Lithium, Bitcoin, VIX, biotech, oil exploration, now you're at minus 3% and dropping. Clean energy, commercial real estate, Brazil, ARC Genomics, 4%. Tesla, 4%. Uranium, ARC Innovation, and then all of the financial disruptors got smoked. Rivian off 5%. The chips got hit hard. NVIDIA 4.5%, Intel 3.8%, Texas Instruments 3.1%. So a lot more gloom and doom on all of the things that benefited from that move into the sideways. Yesterday was sideways normal. Today was a rejection of that. And all of the ones that made the nice move yesterday all gave back more than they made yesterday. So we are back into bullish or into bearish normal. No change from the psychology of the last 8 months. So you got to endure that. You got to learn to suffer. You got to trade what the market is doing. Let me find the boys here. Uh, Tim in Alcoa makes a little bit of bank. Here's your OR3. That's your entry. That's a tradable move, and you should not lose money on that one. The PSAR flip is here, which he got, which is fine. The PSAR flip was tradable, but you'd probably end up scratching, and so you ended up getting what was available. Today was a very quiet day, so there's going to be a lot of sideways chop. This is Apple. 16. Here's the OR3. You could be short here and get that move. This is the PSAR flip. You got paid. This is a good short. I want you to cut that. When this does not fail, cut it. And then you cut that one fine, and that would make you about scratch on the day. And then if you take that one, you're net positive on the day. Devin, oh boy. Well, we just got to work on the span of control or recognize and find the mover. When this PSAR breaks and you get all of that, that's also a collapsing dragon right here, and there's enough time to get into that. These other ones are fine. There just was not any follow-through, but and you were positive for the day. Today was hard because there was it was such a narrow range day in the market, licking its wounds, if I can say it that way. Tesla, boy. There's your OR3. There's your short signal. There's a PSAR flip, which could stop and reverse and get paid a little bit. And you got paid on that one. So minus 0.4, but if we get this one, we're pretty happy with today. So keep firing. Work on that span of control. You're doing fine. Nolan, now the reason I spent the time on the OR3, here's the OR3. That is not an OR3 entry. It has to get north of this to get long, or this is actually a short entry, which gives you this whole move to here. The PSAR flip is good. The stop and reverse is good for a scratch. We should have done better, or could do better on that one. Here's the U.S. dollar, South African rand. This is a really strong signal right here. This breaking of the VWAP and the PSAR flip, even if you don't take that one, when this comes up and can't get through the dragon and goes short again, that's where you want to be for that trade. It actually looks like you got it. Okay, I read that as a wish that you were in. I see now that was the yellow turning the red to orange. Okay, so you got that. That's perfectly played. And that was why. This is a great way to capture the gift. And that's a good short. This one could be long. I just don't know how liquid that one is. I've never looked at the South African rand, to be honest. But, that could be a bigger player as the bricks get a little more juice in them as an alternate to the dollar. So I wouldn't be surprised to see that become more prominent in the future. Here's Constantine's histogram work for his prop trading. So this one is his overall work. He's got 96 winners, 42 losers. That's about a 2-to-1. His average R multiple is 1.8. He's netted 283 R. He makes over 250 pounds. His trade N is large, and so he has a pretty nice SQN and Sortino, and his 11-to-1 reward to risk. He is ruthless on the risk management and finds the returns. His return is a percentage of equity. That'll get you some prop trading money. We're asking him to put together a course on how to do that. His average winner to average loser is 5-to-1. When you have a 2-to-1 reward win to lose and 5-to-1 payoff to loss, that's going to give you some amazing stats. Ruthless risk management. Don't let it go to your head. Just exploit the edge that you have. This is the his November scores. They got a brand new baby, so congrats. That's who you're trading for. So this is a 3-to-1 reward payoff, or win rate, I should say. And then the average winner is 0.36 to 0.09 loser. That's a 4-to-1. So he's got a 3-to-1 win ratio and a 4-to-1 payoff ratio. That's a 12-to-1. That's why his gain to pain ratio is so good. The SQN is small because the N is small, but that's a pretty good work on a monthly basis. 38. That's almost 450 R if you annualize that. Don't let that go to your head. But notice, even though he's trading less, his expectancy per trade was pretty darn good. That's his R distribution. So let's apply our 3 rules of looking at histograms. First thing I'm looking for is no losses. Any losses greater than 1R? No. Check. Second, between 0 and 2, I should see something like a normal distribution, which is positive expectancy, and it is. That's the second thing. Check. And then anything greater than 2R is exposure to a fat right tail with gifts and preserving the gifts. He's done that. Check, check, check. So all 3 criteria for the desirable histogram is there. That's a system that's under control. Luke, let's see what we got here. PSAR flip, waits for it to clear before he gets long. He was in this far. Might have taken that one on the 2-bar low instead of taking the 0.3. That's your short signal, or this one for a collapsing dragon is your short signal. So waiting for the RLXD here instead of the violation, that's the cost of that. Now this short, it got all the way back to parity, was still in it, and then comes all the way back to here, exceeds that one, and then still comes back to here. I think I'd rather see you just taking that here. If you were going to take it here, take it here. But if you let it come to here, and now the R10 rolls up, you got to take that, as you've noted. So a little attention to detail there. This short, he waited for this CD to happen, and then it worked against him right away. That's a good cut. When this rolls over right away, I think you could take that here, but he took it here, and that's fine. This should be a stop and reverse. This is really 3 failures to fail. Like this one didn't fail, it went to here. This one didn't fail, it went to here. This one didn't fail, it went to here. So you should be taking that. And then you get this move, and then you should be taking this or this. At least you didn't lose money. Then the PSAR flip, that's good. When you got that much, son, come on. He was resetting his brain, that's fine. I like that. That's reasonable. I like the re-entry, that's reasonable. He just couldn't get on the right side of the bed today. But there's some work to do in here. And in here. This PSAR flip, waiting for the RLXD is here, so we could be short there. And then this is not a scratch, it's a micro win. That's a reasonable, don't lose money, great re-entry, and I'd like to see you take that. So this was a scratch day. We should probably be around 0.2 on that. I know you got a lot on your mind and a lot on your plate, but I'm starting to see some consistency in attention to detail. That's a yellow card. So I need you to refresh and reset and get your mind right. That's my advice. My brother. I mean, you've got 3,000 trades in hand. You've earned a bit of a break. All right, from my brother. Um, this is a long term system that we're working with Trader X, who is a 40-year time in the market professional. You got to have $5 million to get an office call with him for him to manage your money, and you got to lock that up for a year. But in the meantime, what we're working on is this is a weekly chart on AGTHX, which is a broad growth, and we're looking at the stage one RL10 crossing the weekly baby dragon, and then like a Kata 2 crossing the spine, and then probably here ready to get long, and then a second position if it breaks above this. It turns out that if you look at PSAR flips on a 9-day chart as well, you got you a long-term core uh, system. So that's kind of what we're working on there. All right, that's everything we got for today. We'll get this published and posted. Hey, brother, I'm going to turn that over to you for you can manage this. I got to get ready. Tomorrow we got midterm oral exams all day tomorrow, so I got to study some notes. Get ready for the boys. A very good strategy session with VTI about the courses that we've been rolling out and ways to offer more courses, shorter courses, focused technical courses from our successful students to show ways that they've adapted our teachings to their particular residents. That really worked well on the PSX system for crypto, and Griff Cooper and Phil Wu have that for the Kata 2 system. I can endorse that course and my brother's sniper implementation. So we're starting to build the tool set with robust systems, personally adapted, that derive from the lessons learned and foundations supported by creativity, but are maybe more immediately implementable. You can see how they built the lessons and then or built the systems and start trading them while you're developing your own. So more to follow on that. Let's see, brother mine. I gotta make you the host, and I'm gonna hit the rotor. Hey, we got the floor put in. It looks really good, and we got the bathroom cabinets for you to start monkeying around with whenever you're ready. So enjoy.
Yep.
You got that to look forward to.
Ready to go. So I don't know if you guys can hear me. I think so.